This is Rick Rule for Rule Investment Media, sponsors of the Natural Resource Investment Symposium, July 7 through 11, in Boca Raton, Florida, or from the comfort and convenience of your own home via live stream. However you attend the conference, understand that we'll present 50 or 60 hours of intense programming in 4 days, more than you can possibly absorb. To that end, conference recordings will be available, and you absolutely positively need to use them. Also, to that end, before the conference, we're doing pre-conference interviews with the speakers and the exhibitors at the Natural Resources Investment Symposium, so that you can use your time both before the conference and at the conference much more efficiently. Remember, too, that every public company exhibitor at this conference has been vetted, unlike any other investment conference that I'm aware of in the world. Specifically, no public company exhibitor is allowed on our exhibit floor if they aren't owned in my accounts or in accounts that I own partially and manage. While this is no guarantee that the stocks go up, it is a guarantee that unlike every other investment conference that I know of in the world, every company has been vetted. As part of that process, the CEO interviews. Today, I have the pleasure of interviewing a friend of very long standing, JohnMark Staude, CEO of Riverside Resources. JohnMark, thank you both for your efforts on behalf of shareholders, particularly myself, and thank you too for your ongoing support of the Natural Resources Symposium and our investor boot camps.
Delighted to be a sponsor and delighted to have been doing this for decades, actually. It's a lot of fun.
Now, JohnMark, Riverside is the classic prospect generator. For those of you who don't know what that is, that's a company that uses their technical acumen, the respect that they enjoy in the industry, and their commercial acumen to develop exploration theses around mineralized tracts of land and joint venture them to other mining companies that do the heavy lifting with regards to the exploration expenditure. This minimizes the investor's dilution at the knowledge level of the company. Rather than dilute your interest in the company, they dilute your interest in individual properties in favor of risk mitigation. JohnMark's background is uniquely supportive of this, given that he was in new business development, both for BHP and for Teck, which meant that he was a consumer of the products generated by prospect generators for years before he became a prospect generator himself. JohnMark, perhaps you could tell us something about your background, your educational background, your work background, the things that qualify you to be the CEO of a prospect generator and the subject of an interview today.
Well, I grew up in the city of Riverside, California, and did college geology and then did a master's in economic geology at Harvard and a PhD in mineral economics at the University of Arizona, where we were lucky enough to make a big discovery, which is now called Alamos Gold, Mulatos Gold Mine. Also had a chance to work in Mongolia at the giant mine that Robert Friedland built as exploration when we found that, and worked at BHP with a large copper deposit called the Resolution. Used to live in Chile, so I've worked a long time in major companies like BHP and Teck Resources and Rio Tinto, and it's been wonderful to run Riverside, to work with you, Rick, and it's great to be on the conference again this year.
Prospect generators prosper by having specific expertise, either deposit expertise, regional expertise, commercial expertise. Tell us something about where Riverside is focused and why you feel you have specific expertise in those terrains.
I think we have, first off, is copper. We've had a lot of success in copper, worked in copper, and copper is very important. We also work a lot in gold and in base metals, have worked around the world, but we focus in North America. We focus in Mexico, have a very strong portfolio in Canada as well, and are growing. Right after this interview, I head to the airport. I'll be flying to Nevada, where we're working in the United States. But Mexico is a major focus for us, copper and gold.
One of the things that I like about the prospect generator is that it reduces the amount of due diligence I have to do. I've told prospect generators for years when they tried to get me interested in individual projects that I don't care about my opinion of the individual projects. What I care about is whether the people who are going to spend the money on the joint venture partners care about them. And one of the things that I care about is the quality of the joint venture partners that the prospect generator attracts. To me, that's a wonderful forward made way to measure the regard with which the industry holds the prospect generator. Pardon me. Tell me something about your current and past joint venture partners and why that might be exciting to a value investor like myself.
Riverside is so lucky. We have actually been able to work with major parties and have partners such as BHP. We've worked with Antofagasta, Hochschild Mining, Cliffs, Kinross, Centerra, many, many companies. We've had them fund years of work on our projects and portfolios, fully funding us in strategic alliances where we operate. Currently, we're working with Fortuna Silver. I'm off to the field where we're doing drilling and exploration with them. And we've worked with over a dozen major and mid-tier mining companies over the last 17 years as Riverside. You're totally right. They do the due diligence for you as the investor.
Do you have a sense, Jean-Marc, of how much third-party investment in your projects, which is to say investment that you didn't have to fund by diluting shareholders' interest in Riverside, what the quantum of the third-party investment has been over these years?
Yeah, we've had over $94 million of third-party investment into our project, just starting now into the beginning of this year. And now we're on a $6 million program funded with Fortuna Silver, for example. But it's amazing to have that much spending. And we only have 75 million shares out after 17 years, Rick. You suggested this model. We have focused, and it's really allowed for us to have a lot of third-party spending on the portfolio.
And what's your market capitalization and what's your enterprise value, which is to say market capitalization minus equity in other companies and cash?
So our market cap is $11 million Canadian, of which we have over $5 million in cash, just in cash. We don't talk too much about equity, but we do have another 1.3 million in equity. But just in terms of market cap minus cash, gives us a $6 million enterprise value. So we see it as great value.
Which, put into perspective, is the same amount of money that third parties are going to spend in your projects this year. In other words, quite cheap. It's important that investors understand that exploration, at least in my analysis, is more a knowledge business than an asset business. It's important from my point of view that the dilution that occurs doesn't occur at the corporate level, which is where the real assets lie, the IQs of the technologists. Over time, Jean-Marc, in addition to being a prospect generator, you've become a relatively efficient merchant banker, I would suggest, which is to say when there are projects that are more suited to junior capital markets than to major company joint venture partners, you've elected a different route to monetization. Could you describe that business for us and talk to us about how shareholders have benefited?
Yeah, we do. So one of the things we love to do is to put together portfolios. Recently, we did that with our lead asset out of Riverside and did a share split where we dividended to the shareholders shares of Capitan Silver. So me as a shareholder, almost owning 10% myself and delighted to be a big owner in Riverside, never have sold any shares, but got a nice bonus of having the share split. So we do that. We've done that as well with other transactions such as Faraday Copper, Arizona Metals, Silver Viper. We've done quite a few companies where we have provided our projects in and either kept the equity ourselves, therefore not having to go back to shareholders for financings, or we've dividended those to shareholders and they've done well on that side of it. And Riverside continues to grow with having over 5 million cash in the bank.
I hope people are listening to these numbers. It isn't all about narrative. It's much more about numbers than it is narrative. For, in effect, 11 million Canadian market cap, but really 5 million Canadian enterprise value, what you get is a company that's generated $93 million in historical third-party expenditures on their projects. And while you wait, dividended out to you equity in other public companies or kept some of that equity to fund the growth internally without having to issue shares. Jean-Marc, if our attendees would like to reach out to you, and I would suggest to them that they do if they're exploration oriented, tell me who in the company they might reach out to and how they might reach that person.
Well, I'm always glad to talk to anyone myself. We have a telephone number of 778 327 6671. We also have an investor relations manager, Meran, who will also be at the conference and who's at the office early in the morning. And definitely, we'd love to speak to you. Also, come to our website at rivres.com. Email me. We'd love to talk to anyone before the conference, at the conference, or after the conference. This is the one key conference for us that we do all year. We really focus on this conference with Rick Rule and with the team there. It's a great opportunity to meet with investors and co-shareholders.
JohnMark, thank you for your ongoing efforts on behalf of exploration investors, including myself. Thank you, too, for your ongoing support of the Natural Resources Investment Symposium and our boot camps. It's a pleasure to have you with us. I look forward to hosting you in Boca Raton.
Look forward to being there.